All right. The last week when I was with you, we were doing the depreciation. So I can see that it gave most of you, if not all, a bit of a challenge. So I'd like us to actually take things from there, and then we're going to end off things with our trade and other, the current liabilities and other current liabilities and non-current liabilities. That's what I'm saying. I'm trying to say. Okay. So there was a question that we did not finish. Okay, I want us to finish up of this question, and then we'll move on to trade the current liabilities and the non-current liabilities. Right, the question goes as follows. It says that the following information relates to Chukuru trading, and the year end is the 31st of December 2021. The cost of assets were as follows at the beginning of the year. Rand value. We've got the vehicle with an amount of 100,000 Rand and equipment with an amount of 80,000 Rand. Accumulated depreciation for different assets. Vehicle is 12,000. Equipment is 8,000 Rand. It further says that the following transaction took place during the year. On the 1st of September 2021, one of the delivery vehicles was sold out to an external client with an amount of 10,000 Rand cash. And the proceeds from this sale transaction was used to help finance another vehicle from FGH Motors for 40,000 Rand cash. The cost of the sold vehicle was to 20,000 Rand, and its accumulated depreciation of 20% based on the 10%. Based on the 10% of the total amount of all the vehicles. So I was supposed to say, not that based times twice. What additional information number 3 says that on the 1st of November 2001, the company sold one of its equipment to Cherie for 15,000 Rand, and the cost price of the machine was 35,000 Rand, and its accumulated depreciation amounted to 400,000 Rand. So looking at these two different types of an assets, you can see that there is no different in relation to the information provided under your additionals. It's actually the same thing. So it further says that the depreciation must be provided as follows: 25% per annum on the demolition balance method for the vehicle, and 20% on the demolition balance for the equipment. And our year end is the 31st of December 2001. The required part says that calculate the depreciation amount for both the assets and its realization to determine if the asset was sold or was sold for profit or loss. So this was part of my solution, as I was saying, calculation of the depreciation. Right? Anybody quickly who wants to help me? I would require or need your assistant. Charles, do you have an idea? How would you approach this kind of a question if you're faced up with it in the exam?
Okay, the vehicles, can you just scroll up again?
Okay, let me go up. Let me know if it's fine.
Yes, it's fine. The rent value of the vehicles, it's 100,000. Okay,
so
I just want to write it. Yeah, okay.
Let's see. It's 100,000 Rands.
Diminishing method. Are we going to say divide by 25%?
No, I'd rather use multiply. You only divide.
Yes. Multiply by 25, divide by 100.
Multiply by 25, divide by 100.
Let me just look at it.
So I think you should say 25,000.
Yeah.
Okay, 25,000 Rand. Okay. All right. Thank you so much, Charles. Do you want to go further, or do you need somebody to help you?
We only working out the depreciation for 2021. Am I right?
Yes.
So it's going to be only how many months it's there. If you can just scroll up again, please.
Go up.
Just want to verify the time period. It's on the 1st of. No, go down.
Oh, sorry.
Go down with passing.
During the week. There we go. Is it fine? Or should I go further up?
Yes. Okay. Vehicle depreciation is 12,000. Okay, let me just see. On the 1st of September 2021. But we're not working out the delivery vehicle that was sold. We're just working depreciation.
We're working the depreciation
At the cost of the vehicles.
for both, actually. The sold one and the initial one.
Okay. So I believe the sold one, we work it out for 9 months.
9 months.
Yes, and then.
Okay, Charles, thank you so much for your participation. Let me give you a bit of an advice when it comes to this depreciation part. Okay, when you're required to calculate the depreciation, you need to first look at, okay, the information will be available to you. But the best thing is to look at what kind of a method am I using to arrive at my conclusion, meaning the final answer for the depreciation. Well, then that's fine. Let's go further there because we've seen the cost and the accumulated depreciation. All right, the method says that for the vehicle, it should be the diminishing balance. So diminishing balance says that the cost minus the accumulated depreciation, and then you adjust it with the percentage given, right? And then you're going to look at the months or the number of years that you had the vehicle or the asset in question. So in this instance, you were supposed to say 100,000 rand, and then you minus the accumulated depreciation. Let's go up. We're going to look at how much was the accumulated depreciation. Accumulated depreciation for the vehicle is 12,000 rand. Okay, then let's go further down and you say minus 12,000 rand, and you multiply this by 25 divided by 100. Okay, so it's 25% per annum on the diminishing balance method. And the other thing you look at, you're going to look at if it's the same asset or if there's no adjustment in terms of the additional information, you look at how long have you hold the asset for in your business, and then you adjust it by the number of months given. So in this instance, it was actually at the beginning up until the end. So if you want to, let's say, further understand it, you can just say 12 divided by 12, or you can just leave it as it is. Okay, so your answer should be, you're going to arrive at your answer to say, I think it's 88,000. 88,000 is 12,000, sorry, it's 100,000 minus 12,000, and then you multiply this by 5, you divide it by 100. Right, meaning your depreciation should amount to 22,000 rands. Then you put it here. Sorry, let me just go back a little bit. 22,000 rands. Okay, that's your first part of the depreciation. Looking at the additional information here, you're given more information in regards to the vehicle that was sold. It says that on the 1st of September 2001, one of the delivery vehicle was sold out to an external client for 10,000 rand cash, and the proceeds for this sale transaction was used up to help finance another vehicle from HH Motors for 40,000 rands. Okay, so it says that the cost of the sold vehicle was an amount of 2,000 rand, and its accumulated depreciation is 20% based on 10% of the total amount of the vehicle. All right, so being faced up with this kind of the question, the first thing that you have to do is you would say sold vehicle, right? And then you adjust it by how much was the total cost of the vehicle. It's 100,000 rand, and then you multiply it by 10% because we were told that the accumulated depreciation for this one, let me go further back. Go further back. So it says that the cost is 20,000 rand, and the accumulated depreciation will be based on 10% of, sorry, 20%. I think I made a mistake here. With an accumulated depreciation of 20%, and is based on 10% of the total amount of the vehicle. Okay, so what you have to do is you would say 10,000 rand for the total cost, and then you multiply it again by 20%, 10% and 20%, and then you will be able to get to your final figure. There would be your accumulated depreciation. Okay, let me quickly get you to the figure. You'd say, we know 100,000 rand of 10% is 10,000. So you just simply say 10,000, you multiply that by 20, you divide it by 100. Right. So your accumulated depreciation will be equals to 2,000 Rand for the sold vehicle. And that's fine. You're going to say depreciation, you'd say is 20,000 Rand of the cost, then you minus 2,000 Rand, and then you multiply this by 20%, and then you multiply that by 8, you divide it by 12 months. Remember, we only had it for 8 months. We had it from the 1st of January 2021 up until the 1st of September 2021. So 2021 September, it was not yet completed. It was just at the beginning. All right, and you're going to say you minus that 2,000 Rand from 20,000, and then you multiply it by 20, you divide it by 100, and then you multiply it again by 8, you divide it by 12. So this would be your final depreciation for the sold vehicle with an amount of 2,400 Rand. Okay, let me bring you up to speed here. Anyone who would require clarity? I think this question is it's a bit confusing. Anybody who wants clarity on that solution that I just made? Charles, did you get it? Okay, Nicole, please go ahead. I'm going to come back to you, Charles, and the rest of the team. Hi, Nicole, you can go ahead, please.
Hi, so why do we have 8 over 12?
Okay, the reason why we've got 8 over 12 is because we only had an asset from the 1st of January up until the 31st of August.
Okay.
Make sense?
Yeah.
Okay, no problem. Okay, anybody else? Charles, I picked you specifically because you were the one who were trying to make an attempt on it, and I think it was just a bit confusing for you. Are you clear now?
Yeah, I'm getting the picture. So the 100,000 is the cost of the cost of the vehicles. Then you multiply it by 10%, divide by 100.
Yes.
That answer times 20% divided by 100 gives you 2,000.
It gives us vehicle. Yes, it gives us 2,000. And remember, the 2,000 Rand is the accumulated depreciation.
Okay, 2,000 accumulated.
So the adjustment for the accumulated depreciation has to be done because we're following the depreciation, the diminishing balance method on the depreciation. I'm not sure if that makes sense to you. So we're told that it's based on 10% and 20% of the all total cost of the vehicle. I just try to make it tricky there, but it's as easy as it is.
Sir, could you please scroll up to the question for me?
No problem, I'll do that. Let me know if it's fine.
Yes, thank you.
All right, Nicole, you can have a look at it and let me know if you are getting confused.
So I would have taken the 20% solely on the depreciation amount. Like I would have times the 100,000 by 10% and then taken that amount and times it by the 20% based off like how the question is asked.
So you multiply by what?
I would have taken the 100,000 because that's the total amount, and then I would have times that by 10% because it says the 10% based off of the total amount, and then the answer for that I would have times by the 20%.
Okay, let me reread again. So you were not going to use 20% twice, right? That's what you're saying.
Yeah.
The cost of the sold vehicle was 20,000 with the accumulated depreciation of 20. I think I'm wrong, and thank you for lightening me up there. So basically, we're supposed to say 100,000 multiplied by 10%, and the let me see, cost of the sold vehicle was 20,000 Rand with its accumulated depreciation of 20% based on the 10%. No, I'm actually correct. It says that the accumulated depreciation has to be, remember, because we need to get to the accumulated depreciation as we don't have it, right? However, you need to readjust it with the 10% and go back to your 20%. Because the accumulated depreciation will be based on 2 percentages, which is 10% and 20%. It's quite confusing, but yeah, I think it's quite confusing. Maybe it's actually not even making sense as well.
Yeah,
but
what confuses me in the depreciation.
let's do this to avoid confusion. Let's say this. You see, with cost of the sold vehicle was 20,000 rand based on 10% of the total amount for all there. Okay. And something like this, and the accumulated depreciation based on the 10% there. All right, that's still fine. So that means we have to correct this kind of an error down here. Thank you, Nicole, for that. So basically, we were supposed to say this, right? Meaning that our accumulated depreciation was going to be 10,000 rand, not 1,000. Okay, thank you for that. So it means that here you have to adjust it as well and say minus 10,000, and you multiply it by 20%, and you multiply it by 8 divided by 12. Okay, let me see. 10,000 multiplied by 20% multiplied by 8 divided by 12. Right, depreciation will be 1123.33. Can we do it again? Accumulated depreciation is 1,000 rand, and the depreciation would be, the depreciation will be 20,000 of the cost of the sold vehicle minus 10,000 multiplied by 20% multiplied by 8 divided by 12. Does it make sense now, Nicole?
To me it does.
Okay, no problem. Hi, Norman. You can see Norman is in now. Norman, how are you?
Good afternoon. Sorry I was late. I'm fine, thank you. How's everybody else?
No problem. I was just telling them about your, your clarity question with regards to the adjustments. Remember,
Yes.
on Wednesday we agreed that we're going to tackle that the next week Saturday, right?
Yes.
So now we are finalizing this depreciation thing, and after we are done with it, obviously we'll be looking to the future on what's the adjustments.
Perfect. That's wonderful.
Right. Everybody else who's going to be in the class next week, don't say I didn't tell you that we are going to do the adjustments. Make sure that you refresh yourself on that one so that we'll be able to see or be with me on the same path. All right, but thank you so much, Norman. Nicole, are you okay? Is it fine now?
Yes, sir. Thank you.
Okay, no problem. So let's look up for the depreciation on the equipment. Right, the initial cost of the equipment is 80,000 with its accumulated depreciation of 8,000. So the same process is going to be followed. Actually, Nicole, this is not right. It's supposed to be 25, not 20. The correct amount would be 10,000 multiplied by 25%. 25 divided by 100. And then you multiply this by 8, you divide it by 12. So the amount should be 166, 166, 1667. I think so. 160. Yeah, that's what I'm getting. Sorry, I used 20 instead of 25. So the first depreciation was actually for the vehicle. We can now move on to the equipment. Equipment, we had a cost, initial cost of 80,000. Okay, and its accumulated depreciation. Depreciation is 8,000 rands in the brackets. 8,000. And you multiply this by 20, you divide it by 100, divided by 100. So you'd say 72,000 multiplied by 0.20, which is 14,400 rand. 14,400 rand. So 72,000 rand will be the difference, which amounts to your carrying amount. Okay, the difference between 80 and 8,000 rands. Right, everybody happy here?
Just to verify on the vehicles, ne?
Yes.
Whereby you said one vehicle. The first question, the 22,000 is the carrying value.
Yeah, 72.
No, I'm talking about the vehicles.
Okay.
The 22,000 there is the carrying value.
The 22,000 is the the 22,000 is the depreciation.
The
Carrying
depreciation.
value. Let me bring it underneath. Carrying value will be 88,000 rands. It will be 100,000 rand minus 12.
Okay.
That will be your carrying value.
Okay. Thank you very much.
Let's carry on. Let's have a look at the last item on the depreciation. All right, it says on the 1st of November 2001, the company sold one of its equipment to Shireen for 15,000 rands. The cost price was 35,000 rand, and its accumulated depreciation is 4,000 rand. So this one is it's given straight. It's given straight. So what you do is you'd say cost 35 minus 4,000 rand for the equipment. So you would say equipment sold, things 35,000, and then its accumulated depreciation. It's 4,000 rands. Put that in the brackets just to show that it's a minus, and your carrying value. The carrying value, it will amount to, I think it's 31,000 rands. Can you agree with me on that one? Carrying value is 31,000, and then you multiply this by 20, you divide it by 100, and then you multiply, we only had it for 11 months, and then you multiply it by 11, you divide it by 12. Okay, let me just search for the final figure quickly. 31,000 times 25, sorry, 20. My apologies, it's 20. Multiply by 20, you divide it by 100, and then you divide it by 12, and then you multiply it by 11. My depreciation is 5863. That's 5863. That is your depreciation part. Okay. Well, let's go further and see. We were only dealing with those two assets. Let's look at what's called the realization account. Realization values. We're going to the realization. The reason why we're doing the reals is because of we need to determine whether the sale was on was on loss or a profit. Sorry. Realization values. Come on. Sorry, my laptop is freezing. Let's get back to it. Realization value. Norman, you're in the class. Do you know on how to get to your realization? There was a disposal of an asset. Please help me here.
I'm not as familiar with the numbers of you guys as you guys will be, but the theory of it is that we would take accumulated depreciation on the asset sold to the date of the sale.
Okay.
And subtract that from its cost price.
Okay, let's do it via the debit and credit draw because the T account would require us to do the debit and credit.
Yeah. So we would credit accumulated depreciation.
Oh, sorry, let me start all over. Let me not confuse you here. What do we do?
Debit accumulated depreciation.
Debit the accumulated depreciation.
with it, whatever the total amount was that you guys calculated on that asset.
Okay. Let me see the. So for the vehicle, how much is the accumulated? I can see 10,000 rand, and I can see there was another what is it, accumulated depreciation for the asset sold. Sorry about that. Communication flew. So the total depreciation that we did, or that we had the initial one, it was how much? How much was the accumulated depreciation initially?
Would you not? Can I try, please?
Please do. Okay, let me just follow what you say. It's fine.
Okay.
Am I on the right page? Should I go down, or are you fine?
You can just move a bit down, sir, please.
That's fine.
Too much, too much. Just go up again.
Okay.
To the vehicle, the vehicle's calculations.
Okay.
Yeah. Would you not say the accumulated depreciation for the sold vehicle was 10,000 plus that 1,667?
67.
Yeah, the total will be then 11,667 that you would debit.
Okay, let's see.
Is that not it? If I'm wrong, please help me.
Okay, let me see. No, I don't think you're right as well. So you said it's 1,000. It's fine. We can finalize it. Was it 1,000 or 10? I'm getting confused with the figures. Let me go back again. I just want to
10,000.
10,000 and 1,667. That's what you're saying. So it's 10,000 as per Norman plus 1,667. Is that what you are?
Yes, that's what I was saying. Then it amounts to 11,667 for the vehicle.
Okay. All right. Any dispute? Sorry, Norman, give me that equal figure. 11,667. All right, you can go ahead. What are you crediting? Or what are you debiting again?
So that would be the depreciation for the vehicle, if I'm not mistaken now.
Are we debiting the depreciation?
We would need to debit, we would need to credit depreciation for 1,667.
Okay.
To contra it out of its, because that's the current portion.
So you're
That's
saying
the
that we
current
need
year's
to
portion.
debit the depreciation? That's what you're saying?
No, credit depreciation.
Credit depreciation.
Because
Credit.
when we raise depreciation, it's an income statement account, and we would debit depreciation, credit accumulated depreciation. If we're realizing the asset, as far as I understand, we must credit depreciation so that we reverse it out.
Okay. So it has to be like this. So you debit your accumulated depreciation and credit the depreciation itself of 1,667.
To move it to capital.
Okay. So you done?
On that one, yes, I think so.
All right. No, that's fine. Is there any objection to what towards Norman? Thank you so much for your attempt, Norman.
Thank you.
Right.
Sorry, Puti, can I come in there?
Please.
Can you hear me?
I can hear you loud and clear.
All right. I think I just want to understand, Norman, if you can maybe help there. The 1,667, why do we need to bring it up as a realization? Because this is a depreciation of, from the amount that the vehicle was sold for. So why is it recorded as a depreciation maybe with this other one? I just want to understand that. Why do we bring it up, the 1,167?
No, it's fine. Norman, can I take over on what you said?
Yes, please.
All right. Norman said that we need to create that because we need to raise capital.
We need to raise the capital.
That's what he said. Sorry, I'm speaking with Matapem.
Yes.
Okay. That's what he said. He said that the debit of the depreciation will come, so the credit depreciation will come to will come in effect simply because we need to raise capital. That's what, did I hear you correctly, Norman?
Yes, that was what I thought it was. I stand to be corrected.
Okay.
All right, thanks.
Okay, Matapelo, before you go, please come back.
I'm here, Puti.
All right. Do you have any idea? Do you have any objections as to why here is reasons as to why he's doing that, of which is to raise capital? That's what he said. But you seems to be quite confused about the movement with regards to the depreciation being on the credit side.
Well, according to my observation, maybe from the exercise,
Yes.
I would only record depreciation based on my vehicle and assets, not what I've sold out. What I've sold out, it no longer counts. So
Okay.
all I'm recording is what I am owning.
Okay.
According to my understanding, but I stand to be corrected still.
No, okay, no, you're right. Thank you so much for that. Is there anyone with an idea here as to why you coming up with that knowledgeable idea? Okay, guys, let me just clarify this. When you are recording your realization account, there's only one reason why you're doing the realization account. It's called an asset disposal. There must be a disposed asset. If there's no disposal, there's no way you can realize any asset disposal or any asset. And the second reason why we are doing that is because we need to determine as to whether the sale of an asset occurred on a profit or like. Those are the only two reasons. First and foremost, you establish your realization simply because there was a disposal. Yes, the vehicle was disposed at some point during the year. And secondly, you need to do that based on determining whether the transaction that you're going to record under your P&L and OCI statement would reflect a profit or would reflect a business. At the end of the day, it will go there under the expenses or under the additional income or other incomes. That's the only reason why you're doing that. It's actually quite all right. But here's the thing: always you need to remember this when you're doing the realization account. You need to have. I'm going to ask you to be on mute if you're not saying anything. I think it's Zitobile. Please mute yourself, unless if you want to say something. Thank you very much. Okay. Under every realization account that you're going to do, you're going to have the credit account of the accumulated depreciation for the sold vehicle. And then you're going to have, did we receive the amount for the disposed vehicle? That will be the credited as well. And then on the debit side, you're going to have the cost of the vehicle, simply because we are raising an asset which increases on your debit side. And that's how it is. So with that being said, it means that we need to relook at what Norman gave us as part of his solution. So this is what you're going to do, Norman. You are going to debit the cost of the asset disposed. Okay, so we're going to look at the question. Let's go up and have a look at how much was the cost. Asset vehicle, asset vehicle. So it says that the cost of the asset sold was 20,000 rand with its accumulated depreciation that is based on 10% of the total amount of this. Meaning that your cost will be 20,000 rand. Sorry, yes, I'm right, the cost. It will be 20,000. So my laptop is freezing. So the cost of the asset disposed, it amounted to 20,000 rand. That's going to be on your debit side, right? And then you're going to credit accumulated depreciation. And the bigger question will be, how much is the accumulated depreciation? So we're going to look at the accumulated depreciation for the sold vehicle. So the additional information tells us is 10% based on the total cost of all the vehicle. I think we came to that amount as, sorry, I'm going to be a bit slow on that one. My PC is freezing. Sorry, I think it will just come back now. Okay, if you do guys hear me, can somebody say yes? Can you guys still hear me? Are you guys there?
Yes, we can.
Yes.
All right, no problem. All right, thank you very much. So it's going to be 10,000 Rand as our accumulated depreciation. It will come to the credit side as well, okay? So meaning that you're going to have your accumulated depreciation as 10,000 Rand, okay? Depreciation. This laptop. Accumulated depreciation, which is going to amount to your 10,000 Rand. So let's just have a look at, was there any depreciation calculated on the sold vehicle? So your 116 would also be there. Okay, so you're going to say 10,000 Rand plus 116. Remember, your accumulated depreciation form part of your, sorry, your depreciation forms part of your accumulated depreciation. Just a moment. Then your accumulated depreciation will be plus with 1667. So the total would be, I think Norman, you got it right, but you just put it on the wrong side of the T account.
Yeah, looks like it.
Yeah, if I remember quite well. So you're going to say 10667. So there's going to be your total accumulated depreciation of the sold vehicle. So let's have a look at what's going to happen under your.
Sorry, Puti.
Yes, yes, sir.
It's 11,667.
Oh, it's 11,667. Thank you for that. 11,667. Right. And then you're going to, what else are you going to do? You're going to credit your bank. Just a moment. So the bank will be how much have you, can you all see? So the bank will be how much have you disposed your asset for? Sorry, how much have you used to purchase a new vehicle because the money is going out of the business? So let's go back and look at the vehicle. So it will be an amount of 4,000 Rand because, sorry, 40,000 Rand because they use cash. Sorry. Okay, let's see. Sorry for that disturbance. Did I say the amount is 10,000 or was it something different?
40,000.
40,000 Rand. So it's going to come up this side. So basically what you're going to say, you'll say 40,000 Rand plus 11,667. I think you're going to have something like 51,000. That's your total credit. My total credit side. This side will be 51,167. And then you're going to look at my debit side, which is 20,000 Rand. So what does the principle say? If your credit side is greater than your debit side, it means that you're going to be having the profit on sale of an asset. So how much is 51,167 minus 20,000? I think it's about 31,160. Am I correct? 1667. So
31,667, yes.
31. Isn't it 31,167?
31,667.
31,667 Rand. So this profit on sale of an asset, which is the vehicle, is going to be transferred through to your profit and loss account statement, and then it's going to be part of your additional income. Does that make sense? Do you all understand? You all understand? Okay, let's have the equipment. So the same process will be followed. Without even knowing the figures, you just say debit, the cost of an asset. of an asset, and you're going to credit depreciation. Right, being the accumulated depreciation for the disposed as well as the depreciation in the current year, and then you're going to credit your the amount that you've disposed on cash for, and then you're going to credit the same amount. Right, how much was the cost of the disposed equipment? Let's go to the question. On the 1st of November, the company sold one of its equipment to Shireen for 15,000 Rand. Cost price of this machine was 35,000 Rand. Its accumulated depreciation is 35,000 Rand. Okay, so you're going to say 35,000 Rand was the cost of the machine. It's going to come up to the debit side. Go down. So the cost will be 35,000. So how much is the accumulated depreciation? I think I've seen something like 15,000 if I'm not mistaken. Accumulated for the sold. Okay, it's 4,000 Rands. Okay, it's 4,000 Rand, and add the depreciation in the current year for the same asset. Let's see, equipment sold, accumulated depreciation and carrying amount is 5638. So 5683. So we bring it here. 568. Sorry about that. Then we have to edit here. 5683. We'll add up to that one is fine. Okay, and then we also have to look at sorry guys, you'll have to bear with me. I don't know what is wrong with my PC today. On the disposed, sorry, I'm back. So the equipment is actually gone. Just a moment. Okay, basically we don't have, what is it? We don't have the cost of the disposed. Cost price of the machine is 50,000 Rand. It was actually on the in the debit side. So let me go down. Okay, it's gone. Let's see, accumulated depreciation and the depreciation part. Okay, I think you're fine here. And you'd say 4,000 Rand plus 5,600. I think it should give you 6,800. It should give you 9,000. 9,683. So it will be 9,683. And the difference would be, how much is 35,000 minus 9,683? Somebody quickly help me there. Somebody quickly, please.
25,317.
So it's going to be the loss on the disposal because the debit is actually greater than the credit. You said it's 25,000?
317.
317. Okay, so the same amount will go through under our statement of profit and loss and other comprehensive income, but this time around is going to be an expense because the disposal was made at a loss. Okay, so before I move on to the current, non-current liabilities, are there any questions?
What's happening to the money that the equipment was sold for? The 15,000. Is it not going into the bank?
Let me see. Sorry, I'm on the wrong page. Okay, let's go back to the question. On the 1st of November, the company sold one of its equipment, Shireen, for 15,000 rand. The cost price of the machine, sorry about that, I think you're right, Norman. On the 1st of November 2000, the company sold one of its equipment to Shireen. For this, cost price was 35,000 rand. Its accumulated depreciation is actually 4,000 rand. It's supposed to be the same. It's supposed to be treated as the same as. Actually, I think I made a mistake. That amount was supposed to come here. Right, 15,000 minus 9683. How much is it? Sorry, we're supposed to say 15,000 rand here. Wait, but there was a. Just a moment. Just want to see something quickly. Okay. Just wanted something on the vehicle. Just a moment. Please bear with me. Cost price of 15,000 rand, and accumulated depreciation is fine, but we need to know the proceeds. We need to know the proceeds. Okay, sorry, I think I've got an answer there. Remember, we did not pay any dealership with regards to the purchase of the new vehicle, which is why we don't have any credit figure on that one. So the process, obviously, it will come to. What I'm trying to say is we didn't spend any money to purchase any others or any other equipment on that one. So it will stand as it is. So you are basically going to have your cost, which is 15,000 rand, and 9683 as your accumulated depreciation. So the only figure that we have to adjust in here is this. So, sorry, Norman, how much is 15,000 minus 9683?
I'll work it out quickly.
Okay.
15,000.
It's 5137.
It's 5137. That's 5137, right? So still is going to be a loss because the debit side is greater than your the credit side. So it will be recorded or recognized under your statement of profit and loss and other comprehensive income. Okay. Somebody was asking this question. Who was it? Is everybody happy? Or do you need clarity on something? Okay, please unmute yourself. Let's just discuss this depreciation thing. I just want to check on how you guys are, how comfortable are you with regards to this depreciation thing? who is actually comfortable and who is not comfortable, and where do you want me to assist you when it comes to the depreciation? Anybody? Jacob, you've been quiet, man. Can you come to the party, please? Jacob Mlauzi. Mr. Malauti. Pal. I know you were in my text class. Are you fine, Pal Baratsai?
I think I'm fine. I understand what's happening. I get the sense. I think I just need to practice from now on.
Practice will make you perfect. And it's the only way to heal from this thing. Well, Charles, are you okay?
Yes, I'm fine with this. I just wanted to check with you. The first question that we did on Wednesday,
Yes.
the straight line,
Straight line, yes.
depreciation that we did. I just want to have clarity on that, because I see we've used the very same amount. The cost. If you can just move up, I think I saw it earlier.
Okay, should I go back to the question?
Please.
All right, just wait a moment. I'll go back now. Just a moment. Wednesday question. Here we go.
Yes, the straight line one.
The straight line?
Yeah, the cost of the 400,000. If you I just want to check if it's correct. If you also do it like this, if you subtract the depreciation amount from the cost each year, then you start each year with the balance between.
You start each year with the carrying value.
Yeah, with the carrying balance.
Yes.
Would it be correct if I say, okay, I didn't work it out now, but then if you subtract the on the first year it was 300
so the carrying value is
333 as 53,33.
Okay.
Divided. No, that would be your starting value for the next year, basically.
For 2019.
For 2019, yes. And then you subtract the accumulated value from that amount.
Yes.
Which is the 50,000, because it's a full year's depreciation.
All right.
I'm just checking, and then for the next year the same. So it's going to be triple. I just want to see how much is it going to be. Okay. Minus 50,000. So your start. Is this correct? No. No, it's I didn't use the correct. It's. Was it 5 3s or 6 3s, 33? I think we did it in class.
Okay.
But then, yes, what I wanted to know, will it also be correct if you do it that way?
Basically, you're saying this 400,000 rand divided by 8, right? Please help me with your calculator on your side, and I'll follow the steps.
Okay, it's 400,000 divided by it was 8 months. Divide by 12.
8 years.
8 years divided by 12. Let me just do the calculation here. Times 8 divided by 12. Do I get it? 266.
So you said 400,000 rand divided by 8 years.
Okay, let me just. How much? 400,000 divided by 8 gives you 50,000. Divide by 8. Divide by 8 years.
Okay. I think some information is actually cutting in here, but I think I know where you're getting. Your confusion might be lying on what's called the carrying value. All right. So, or the depreciation and the carrying value. All right, Charles, let's assume that the year end here is the 31st of December every year. Okay.
Yeah.
So meaning that on your first year, you're going to have 400,000 rand, and you divide it by 8, you multiply it by
12.
And remember, it was it was purchased on the 1st of May 2018. For 2018, it can be full.
Yeah, it can be full. Yeah, it's the months, isn't it? The remainder of the months.
It's going to be May, June, July, August, September, October, November, December. Meaning that you would say 9 divided by 12, right? Then how much are you getting there on your calculator?
Is it that is? Oh man.
Please help him quickly.
Please, guys.
Please help him if you got the calculator there. So, but you'd simply say 400,000 rand divided by 8 years, and then you multiply that by the adjusted period months, which is 9 divided by 12.
50 times 9 divided by 12.
Yes.
50,000 per year.
Is it 50,000?
Yep.
Are you sure? Can I help you? Let me help you on. That's 400,000 divided by 8. All right, 400,000 then divided by 8 is 50,000. And then you will say multiply by 9, and then you divide that by 12, right? So it's 37,500 rand. Okay, 37,500 rand is going to be it's going to be depreciation for 2018. Yeah. That's fine. Since we've got the cost, we can also look for the carrying amount at the end of 2030, which is going to be like this. You can just say 400,000 rand. When you minus 37,500 rand, you go back actually to the cost. And then you say minus 400,000 rand. So you'd have 362,500 rand. I think this is the part that confuses you, but I'll explain it. I think I've got an idea as to what. All right, this is your carrying amount for the 2018 year, right? Let's say we're looking for the depreciation for the 2019 year. Our depreciation is based on the cost model. You're going to say, again, 400,000 rand. And this time around, because there's no apportionment of the months, you just say straight 8 years, and then you get the equal sign of 50,000 rand up until you reach the final year. Does that make sense? So meaning that your carrying amount would be, I think it's about 350,000 rand, and it will be for 2019, 2020. I think our year end is 2021, and up until 2020 and 2021. So this is going to be your depreciation amount in that sequence in terms of the number of years from 2019, 2020, 2021. So your depreciation will always be 50,000 rand. Because it's the cost model, you don't have to adjust it via the minus of the depreciation or the accumulated depreciation. All right, Charles?
Yes, now I'm with you. I was thinking maybe the depreciation for the first year, which is the 37,500, you're going to subtract it from, okay, let us say the 362,500 is going to be your start of your 2019 depreciation. Then you say 362 divided by 8 will give you, is it not the case?
No, that's not the case.
So you use the cost, the initial cost.
Because the method is straight line method.
Okay.
But your carrying value, Charles, decreases.
Yes, each year. Yes, I'm with you there.
Yeah, but going forward with the 2019 year, it means that you're going to say 362,500 minus what is it, 50,000, and then you get the new carrying value, and then you minus it again with 50,000 rand, and you get a new value, and then you minus it with 50 up until it reaches 2021.
Okay. No, I'm following, and I'm with you. Thank you very much.
Yeah, Charles, you need to be familiar with your method and how it works.
Noted.
Yeah, if you're familiar with your cost model, along along or during the course of, not today, during the course of our engagements, obviously I'm going to introduce you to the production unit method so that you guys will be familiar with all the methods. Okay. But this should be the simplest way of getting through to your carrying amount as well as your depreciation, because it's not complicated as well. You've got the reducing balance method where you have to go via the accumulated depreciation and make that kind of an adjustment. It shouldn't be that bad. All right. So I'm going to refer you to actually do, let's have an assignment, me and you. I'm going to ask you to redo your question 1 in TAT 102 if you have it, because this was developed in the TAT. So you need to do question 1 and question 17. Okay. And then if you are having a bit of a problem in the questions that you'll be doing, you can engage with me via Teams. I'm fine, but let me know in advance just to check my availability. Or you can send me an email and then I'll be able to respond back by an explanation.
So is that question 1 on page 5 and question 17 on page 75?
Okay, let me just see my TAT. Question 1 is on page 5, yes, and the other one is actually on the next page. So it gives you the kind of steps in terms of how to. Question 17 is quite complex. That's why I like it. You understand? So question 1 is actually entailing the basics on how you have to follow through the. It's like it's welcoming you basically. And when you move to question 17, they're more like the same. They're not that what is it? As much as they're not integrated, but their treatment is more kind of like the same. They're not hard in anyhow. Okay, so you can start doing this in your study guide and go through your theory, practicing your questions and questions and questions and questions, and then from there you can try and do these questions without seeing the solution and see on how far it can lead you. And then should it give you a problem, you can engage with me at any time, but I will respond to you back as soon as I've got time. Or you can engage me in the class. I think it will help the other students as well. And we'll take it from there. Are you happy? Charles, are you there?
Yes, sir. Yes, I'm with you.
All right, Nicole, I can see your hand up. Charles, I hope you are you fine? I can move on now.
Yes, sir.
Nicole, you can go ahead.
So I just wanted clarity on a realization account. Does it help you determine the profit and loss for the year?
Yes.
Like the purpose of it.
Basically, it helps you determine the profit or loss on the sale of that specific asset for that specific period the asset was sold.
Oh, okay. And then so like in a depreciation question, say for example, like they say year ended May 1st, right? But then they say April 3rd they sold it. So to calculate the depreciation you'd use from like you'd use 12 months, and then if they want the how much it would be like after you sold the asset, then you use from the April date.
You can use the April date, but I'd like you to make some bit of an adjustment or correction if I can use the word. You don't. Your end will never be at the beginning of the month in most cases. Should it fall in the beginning of the month, it means that you need to go 1 day back. So if it's like, let's say the year end is, which is unlikely to can happen, in what you're saying, where you say that, for example, the year end is the 1st of May, practically that would never happen because we deal with end periods. So if it's the 1st of May, because that month hasn't started as yet, that means that it's going to be the 30th of April. Am I making sense? And if the asset has been sold on the 1st of April, with that means you're going to say, because it was sold at the beginning of April towards the end of the year, you just say multiply by 1 divided by 12.
Okay, so what I want to know is when you're calculating depreciation alone, that is when you use like the year end amount. But then if they, for example, want the depreciation on the same asset, but you sold it, that's when you'd use the separate date from like that date to the year end date.
Can you give me an example on that? I'm not sure if I do follow.
Say at year end 31st of May, right? And then they say on the on June 3rd you sold that same vehicle.
Sorry, can you go? When you can start all over, please. When you buy, when you sell it, when and when?
Say you have a vehicle, like your year end ended on the 31st of May.
31st May, yes.
And then you sold your vehicle on the 3rd of June, for example.
Yes.
To calculate depreciation, you would use, if you got the vehicle, like for that year, you'd calculate the whole year, like that's the depreciation for the year. And then for when you sold the vehicle, you'd calculate that separately.
Okay. All right. Thank you so much for it's quite interesting for that kind of a question. Guys, what Nicole is saying is, what if you sell the asset post the financial year end period? For example, if the year end is the 31st of December 2021, and then you decided to sell the asset in February 2022, the question is, how do you calculate that depreciation separately and stuff like that? So, Nicole, I think this is your question, but the answer to that question is a no. You won't get what's called the post or the post required calculations on the dip, because we're not in that financial period as yet. You understand? It's like you're selling an asset next year that it's actually for this year's financial period. You can't do the calculations for that. Remember, there's a lot of adjustments that is going to be happening there. We don't know how much will be the carrying value for next year. We're not sure how much is it going to be the cost. And then we're not sure how much is on how are we going to disclose that under our notes. We don't know whether we're going to change the method that are being used in the current year. So I've never seen such. I don't think you will come across something like that. All I know is you can deal with what happened previously. All right. So it's going to be something like any arrears. So previously in the depreciation works in this way. The chances are you haven't calculated the depreciation previously. So you have to account from the date. No matter, I can see your hand. I'll come to you just now.
Thank you.
You have to do the depreciation calculation from that period you acquired your asset up until in the current financial year. You can't go beyond the current financial period. All right. Norman, before I come to you, let me just hear if Nicole is happy or satisfied about my
yes, I am. Thank you.
But was that your question?
Yes, I just wanted to know like how the calculations would work if it were to be that way.
Okay, no, unfortunately it's not going to work like that, my dear.
Okay, but if it's in the same year, then it would work that way.
Yes. If it's in the current financial period, obviously you're going to adjust the months.
Oh, okay. Thank you.
You're welcome. Norman, you can go ahead, please.
Thank you, sir. It was a very similar comment and question to what Nicole has been talking about now. I think that you'll remember in our previous example where we've got the standard, the quality, and the average machines that we were depreciating.
Yes.
There was a disposal that occurred in April of a particular machine, and then there was the trade in and all that sort of calculation work that we did.
Yes.
But my question about that is that our year end for that particular example was the 31st of December 2021.
Okay.
The disposal occurred in April 2021. So I understand the debits and credits around debiting and crediting depreciation and accumulated depreciation to understand the carrying value of the asset.
Yes.
What I'm a little confused about is that if we're not at the end of the year, do we create a realization account? Is the realization account something that occurs during the year, or do we just do it at year end in terms of restating the position of that asset and its realization in the revenue space?
Okay.
That's a long one. Sorry.
No, that's okay, and I like that kind of a question. All right, basically the realization, you need to account it immediately on the spot when it does appear, all right, or when it does take place. However, you're going to record that. Remember, the financial statements are not prepared like maybe in 2 months or so. They only getting to be prepared. We consolidate everything that happened during the current financial period, but we show that to whoever that wants at the end of the financial period. But the calculation in regards to the disposal, it has to be done immediately because the asset is no longer there.
And we'll do that inside its ledger account.
In the realization ledger account, yes.
And the realization account then has contras in accumulated depreciation, and the asset account, wherever
Yes.
the asset sits. Thank you.
So the contra will be the accumulated depreciation being the credit and the bank on the credit, as well as the asset on the debit. That will always be your contra allocations accounts.
Thank you. Thank you very much.
You're welcome, Norman. Any, you guys are coming up with this interesting questions today, and I like that. All right, we've got about 30 minutes remaining. I just want to move on to the theoretical part of our last segment, the current liabilities and non-current liabilities. All right, the next segment, we're looking at the accountability of the current and the non-current liabilities. I hope you can all see that. It's Learning Unit 13. Starting things off with your current liabilities. Liability is defined as your claim, which is a claim which a party other than the owners has an assets on of the entity which originate from the past transaction or the past events because of the legal action, right? Meaning that you have to enter into a transaction with another party by buying goods on the credit. So that means you will raise your liability. It may also be expected that the payment of a liability will lead to an outflow of their resources, which I believe it can be cash or maybe unless if it's a barter. It can't be a barter transaction, but it will be a legal obligation that you set with your client to say that I'll pay you in this kind of terms, right? So we got two types of liabilities, which are current and non-current liabilities, depending on the period of the payment. Right, if you agree with your client that you will pay your obligations within 12 months period, the liabilities will fall within 12 months period. So it has to be payable within 12 months period. It will fall under your current liabilities. And payment that is agreed in more than 12 months payment terms, it will fall under your non-current liabilities. Okay, let's have a look at the examples for the items that are falling under the current liabilities. Okay, just a moment, guys. I don't know what is wrong with my laptop. It's not moving. Okay, there it is. So items that are classified to be current liabilities with the trade payables, that's your creditors or your accrued expenses. If you're behind, and the income received in advance, if you have received it in advance, should they say that they are terminating the deal with you, it means that you're going to be able to pay them back what you owe them. So installment payables on the long-term loans, so that will form part of your current liabilities as well. So it'll work in this way. You're going to be given what's called the long-term loan that has to be payable in more than 12 months period. So every time when you make a payment to that liability, it can be on a quarterly basis or biannually or on annual basis, it will fall under your current liabilities at short-term portion. That shows that you have paid whatever the portion of the amount you made. That amount that you owe towards SARS, it's usually an output, and you've got your bank overdraft. Bank overdraft, most of the people, we go through that. So now I can see bank, they've introduced this thing of you can do the immediate overdraft on the app, and you will see as to whether you do qualify or you don't qualify. Okay, let's have a look at trade creditors. This means that it results from the goods and services purchased on credit, and this may also result in a discount to be received should the payment be made or done in the agreed specific period, which is deducted from the purchases itself. So when you're given the settlements, okay, no, it's fine. As I was on the trade payables, it says that the results from the goods and services purchased on credit, and this may result in a discount to be received should the payment be done in an agreed specified or specific date, and it can be deducted from the purchases. Okay, I've developed a little bit of an example here. Right, it says that Pooty Limited purchased the merchandise from Belted Trading with an amount of 1,000 Rand at the end of August. And Pooty Limited made a full payment after he was granted a discount of 15%. So basically, you can see that this is a trade and other payables control account, meaning that it's not a non-current liability. Required part for the ledger. So you're going to open up your own trade payables control account, which is for the Belted, that's your FAC. And then you making the debit in a bank, and then you credit your settlement discount received, and then you credit the purchases. I'll explain this just now. So under your settlement discount received, the purchases of 150 and the trade payables of 150. Remember, you got that from 1,000 multiplied by 15%. That will give you the discount received that you have received with an amount of 15% that has been adjusted in there. But let's unpack the trade and other payables control account. So your debit bank, remember the trade and other payables control account is a liability, meaning that it does increase on the credit side and it decreases on the debit side. So any transaction that comes up on the debit side, it means that it's actually taking off or decreasing that account in question. That's why you see bank of 850 on the debit side. And then you're also going to debit the settlement discount received just to match the purchases with an amount of 4,000 Rand. It's just come as an allocation account. So purchases, because it was made on credit, that's why you see the credit of 1,000 Rand as purchases account. That's another contra allocation account. So looking at the settlement discount received, it is actually debited by your purchases and your trade payables control account on the debit side. So I prove this debit here by mistake on the credit side. Okay, let's see. Let's unpack the settlement discount received. So we need to remember that it is deducted from the purchases in determining the cost of purchases. Right? So this is what happened. Initially, the transaction will start by making a purchase by credit. And then you agreed with your client or you agreed with your credit provider to say, I'm going to pay you. And it will depend on if the credit provider has what's called the discount settlement, or the settlement discount received rather. Then from the purchases that you have made, you need to deduct the settlement discount received. Hence why you see that one under the trade and other payables control account being on the debit side. Okay. Okay, sunraising the current liabilities. There's a quite a number of liabilities to be mentioned. However, let's refer to the introduction part. So basically, you go back to your trade and other trade payables, your VAT, your overdraft, and so forth and so forth. Disclosure in the statement of financial position. All the liabilities payment that are within 12 months period are recorded in the statement of financial position as a current liabilities. So meaning that all the liabilities that we have identified as current in the beginning, when you record them or disclose them under the statement of financial position, you're going to have them under what's so-called current liabilities, and then you put them there. Okay. All right, there's another example here. I know we're running out of time. I'm just going to be quick on that one. The following balances were taken from the post adjustment trial balance of Pooty Limited as at the 31st of December 2001. The VAT control account, the accrued interest and loan, trade payables, and the income received in advance in the bank overdraft. So we're proving what I was just explaining to you now in terms of the disclosure under the statement of financial position. So basically, you're going to have statement of financial position, and then you're going to do your assets, your equity, and then you're going to have your liabilities. And all of this that are put here in accordance with your own figures, you're going to put them under the current liabilities. You just put the just put them in order just like this and add a total amount, you get a total in regards to your current liabilities. So the trade and other payables control account, This represents all the individual creditors in the creditors ledger. They must be equal. They must be balanced equally to their individual creditors account, balanced with the transfer when the transfer actually takes place on a daily basis or on a monthly basis. Right. So the list of creditors goes in this way. What happens is you buy from Build-It, you buy from Cash Crusaders, you buy from all these sorts of your credit providers. So individually, you need to open what's called the T account under them. And then that total, at the end of the day, you balance it off, and then you make one account called the Trade and Other Payables Control account, and you total it off. So if you can look at the Trade and Other Payables Control account is actually the same. It's treated the same as your Trade and Other Receivables Control account. It's just that the Payables Control account has much weight on the credit side as opposed to the Trade and Other Receivable balance. It has much weight on the debit side simply because of it's an asset. Let's look at our posting procedure. So the individual entries in the purchases journal must be posted to the credit side of the personal creditors account. That's what I just spoke about. Now, in the payables ledger accounts, meaning that you open each and every single ledger account for the creditors, and then you close them equally according to how much you had a credit there. So while the returns must be personally debited on the personal account of the creditors in the creditors ledger to the day the transaction takes place, and the individual entries in the cash payments journal must be debited in the trade payables ledger account on the same day of the transaction. Meaning that when you do the CPJ, you're going to have a column for creditors control account, and then that's how you're going to allocate all this list of your debtors according to the payments that you are making. Total creditors control in the purchases journal must be posted to the credit side of the trade payables control account. You underneath the total for all the list, and you transfer them to your trade payables control account. And while the returns will go to the debit side of the trade payables control account, and the total of the creditors control account in the cash payments journal must be posted to the debit side of the trade payables control account. Let me tell you why. Because when you're making a payment, you are reducing how much you owe to your creditors. So the reduction should go to the debit side of the trade payables control account. Entries that are made in the general journal that affect the creditors must be posted to the personal account of the creditors daily, and creditors total column on a monthly basis to their control account. That's actually under your general journal. Should an error occur when balancing the ledger in subsidiaries, the reason for any errors must be identified and adjusted by the accountant, and the following errors could occur. Posting towards the debit side instead of the credit side. It happens quite often. It means that you need to rectify the error side before you can make the transfer to the correct side. For transposition of figures, instead of you putting 210, you put 120. So obviously you're going to balance that with your differences. Incorrect balancing, totaling, or listing. When you balance, you make some errors. So the errors posting entries in journals to be posted in the ledger account. Instead of using the journals, you go via the ledger account. I'm going to jump off this example due to time. And then I think we'll do it next week with the, the adjustments. So we found out that in accounting, this kind of errors was discovered as part of the list of the individual balances creditors ledgers during the process of the reconciliation in the trade payables control account. Right, usually you will see that when we do examples, you've got to open what's called the trade and other payables control account, and then you need to open the list of individual creditors, and you need to reconcile them at the end of the day. So the same principle would apply to your trade and other payables control account. Right, so the total list of creditors balance was over custom 200. I think is one of the examples. I'm going to touch based on that one. Let me finish off things with your non-current liabilities. We'll get back to the question next week. Non-current liabilities is defined as the liabilities which is payable for a period of more than a year. Recording of your non-current liabilities in the books and its disclosure in the financial statements. You get long-term loan and mortgages. I think we spoke about this kind of your non-current liabilities. For every installment in the next financial period must be disclosed as current liabilities in the statement of financial position in the current year. So those are the short-term portions that you can actually deal with. Actually, I prepared you guys a lot of examples, but I think with the depreciation taking longer, that's why we couldn't even manage to finish it off. But it's fine. As we always have more time, we'll be able to do it as and when not as and when basically, but by next week Saturday, we just have to make sure that we jump into this kind of questions. Okay, so that brings us to the end of our session for today, and I want to thank you everybody for joining in.